All right, guys, what's going on? It is, what is it, Tuesday? Yeah, the 11th. So today was an interesting day for sure. It was pretty much all logged in Telegram here. I'll swing it over here so we can see. Again, if you haven't joined, the link will be in the description here, but it's just basically my thoughts throughout the day and stuff like that, where I'm going to put all my videos. I'm going to do analyses every day, kind of breaking down um, in depth of what happened to the day, which points were reacting and stuff like that. So just for my own sake, and again, if it assists other people, then awesome. That makes me happy. So let's just start. So basically, the beginning of the day, I was looking at this to happen. Right, we had a 1 hour range. Okay, so we had this consolidation sweep up in London, beautiful breakdown and structure. So anticipating that price would come up, we mitigated the 1 hour order block, but I was anticipating it to go a little bit higher. And then I was anticipating price to come back down. Really, the main move of the day was this downside, in my opinion, at least to fill up some of that 4 hour OB. Like I said, the 4 hour is still showing bullish signs, and we're actually at a 4 hour bullish order block now. And it was showing conflicting signs just because the 1 hour was bearish, 4 hour was bullish. So what I came to the conclusion was that based on today's daily bear cycle, I think that we're going to be pushing down deeper into that 4 hour order block. Essentially, you can go through this again. Um, it is what it is, but you can see my things beforehand, the screenshots beforehand, and then after. This is one I had my order here, but it just missed. It actually tagged it, but with spread didn't get me. So unfortunate. But then we rolled over, failed right at that order block, and then broke down. But anyways, if you guys want to check that out, there's more in-depth analysis into the in the um, in the Telegram. So let's just jump into today on Tuesday here. So essentially, let's just look at the day before to start off and just see kind of where we're looking at. Let's start on the 4 hour. Okay, so to start off on, let's just start it off at 1 a.m. So that's essentially um, London, but it really isn't. It's Frankfurt, right? But that's when I put on the London kill zone. So essentially, this is where we were at to start off the morning. I don't trade London typically. There's some nights where or some days where I do, but usually I don't just because of the time zone. So anyways, if this is how we're going to be trading London, this is what I would be looking for. Okay, we have a 4 hour order block here. If I do 50% of this order block as well, you can see right there, 13118. So this is what I had set up at the beginning of the day. And I said, okay, 4 hour, we're still bullish, right? We broke 4 hour structure right here, came back down, mitigated the low, broke back up to this point right here, filled in some imbalance. Let me just put it like that. So filled up some imbalance, got a retracement back down to our last order block here, clean setup. And then we went up to attack this high. And what I wanted to see was this get hit the previous day. But on Monday, what Monday did was it just absolutely died down to take out the previous day's lows instead. And what that caused was a divergence between the dollar index and the euro US dollar. So essentially what this means, as soon as we break structure, like so what we did on the 4 hour here, you can see, well, we didn't break structure on the 4 hour, but as soon as we break structure on smaller time frames, I'm looking at this to go higher. So that's why my bias was really bulls. I wanted to see this. I wanted to see price, the way that it was developing in this leg right here, in this part right here after mitigating, made me think that we're going to come back down here first, mitigate this level here, and then continue up. Right? That was the idea of the trade today. So essentially what I wanted to see was sells from well, first of all, we have a 4 hour zone here. And then if I just move this up here, we have a 4 hour zone right up here. You can mark it up. You could also point out that the last up candle, but really this was the candle that mitigated the last up candle right there. And then we broke down pretty aggressively, all black candles. And then what else do we see here is a nice imbalance right here on the 4 hour. Okay, so that's how I start off the day. 1 hour, 1 hour, just beautiful here where look what happened and look what time this is at, right? 4 a.m. So this was the London sweep yesterday where London swept liquidity and then the rest of the day was down. So this is really where the liquidity was injected into the market. Sorry, Jesus, can't speak. You can see we got a nice sweep there. We break structure down, come back up here. This is what we were actually looking for yesterday. but it was too big of a stop. So anyways, did its thing. So no worries at all there. But now I'm looking at this because this is where the liquidity was injected yesterday. I would not be surprised to see this get swept up into this POI right up here. Again, fill in this imbalance right up there. I'll just move it like that so you can see. And then come back down and just start taking out this weak kind of trend that's been developing right here into this imbalance. Look at this 1 hour imbalance. This is what was really like enticing me today, where I was like, oh shit, this is going to be a huge one. I think it's going to just rip down here, take out all these equals, get into this potentially the mid four hour or OB, sorry, or get down to the very extreme point that swept liquidity. And that was the origination of this move. So I had that marked out. And then that's why I said, I think low of the day, if it's going to be a bearish day, is going to be at 1.300. Reason being is because if we look up here and we measure this in pips, we have 51.5 pips, which the average daily range on Euro US dollar for the last week, which is 55 pips, right? So the average daily range for the last week is 55 pips. And so because of that, I think that today, is going to have a 55 pip range, or that's what is likely to happen. So 55 pips, this matches beautifully up with this zone. That's why I was anticipating this. Now I would have had two options here in London. Okay. And here are the two options. First of all, if price starts off and comes down, well, then look at what we have here. We have a 4 hour order block, and then we have this kind of traffic right here as well, right? This order block right here, unmitigated really at the body. Let's see. Yeah, unmitigated at the body right there. Sorry. And then, so let me just mark that out. And that's right at that 4 hour order block, right? So that's a good level to mark out as well. So let's just mark out there and mark it there. So essentially the two options are this. Either London's going to do one of two things. It's going to come back down first and break down into this level, which then I'll be looking for longs to target these equal highs to fill up this imbalance. And then I'll be looking for shorts here to take down, to wipe out this whole structure. Option two is that the beginning of the day, London starts going up and starts taking these levels out right away, as London opens. Then I'd be more inclined to wait for this, right? Or I would be more inclined to try and look for shorts there at the extreme high. If I get them, then great. And if not, then I would wait for a bounce, likely going to be a bounce off this level, right up to discount of this price swing here. And then, to premium of this price swing here into a POI. And then I would be looking for the continuation down to take these. So those are the two options that I would be going into London with. Okay. So now we can go on our intraday timeframes. And let's see. So we have our imbalance here, imbalance there. We know exactly what we're looking for. You could also see that level that we marked out, look at this. We have a sweep on liquidity right there. And then we have a break of structure right here. After that break of structure, we never mitigated this wick, or we never mitigated this candle. And so this wick right here could just be an inducement. And potentially we could be seeing it get all the way down into the wick because it never even mitigated that wick at all. So we'll keep that in mind right down there. That's also lines up almost perfectly with that 4 hour order block. But yeah, let's just see what's going on in Asian, because Asian is important for London, right? It's specifically important for London. We have this uptrend in Asia, right? Then consolidation, and then a sweep of it right here. You see a little minor sweep. And then we have a 15-minute break in structure right here after a sweep right there. So now we had essentially two different sweeps right now that happen in London Open, or Frankfurt Open, really. Okay, we had a sweep on structure here. We had a sweep on a consolidation high here. And then we had a major sweep, right? So that's, even though it was a shallow one, I considered it a major sweep because it's Asian highs. So we had a major sweep, and then we broke 15-minute structure, which means I'm going to be looking for this order block all the way up to this high. That's where I'm going to be looking for shorts, because it does look like that this one is going to play out. It looks like this option down here is going to play out first and then go up like that. That's what I would be assuming at this point. And at least I'd be looking at Asian lows, right? To take out Asian lows, potentially right here, because this is the only one that hasn't really been mitigated. Oh wait, did it? Yeah, I kind of already did. So yeah, just Asian lows would be the first target. Then right down at that 4-hour OB would be the next. Okay, so we can go on the 5-minute, see what's going on here. This could be refined, right? Right up to here is the last order block, the most extreme order block. And this is going to be our 15-minute range wherever this ends here. Okay, so let's just see. Okay, it comes up pretty aggressively. Again, leaving a series of liquidity here, or like a series of lower high or higher lows, sorry, series of liquidity. We already have our 15-minute sweep. So what we can do is we can enter right off of that if we wanted to. Again, you can take that for sure, 100%, 15-minute break-in structure, 5-minute break-in structure, significant level sweep into really the extreme of this whole move, right? Look at 1, 2, this is the manipulation here. This is the move down. So all this right here could just be used as an inducement for this POI here, which is currently in. And then you can see that just that little bit that hasn't been tagged, right? That hasn't been tagged, gets tagged right there. And again, like I said, that was London's high. So there's going to be liquidity within this, in this last up candle. Okay. There's going to be liquidity, but based off of this imbalance here, I think what it's doing is just setting up to take out. So it's pooling liquidity now a little bit more to take out and then go down, right? That's what I think. But because we have this structure here, and because I think this side is at least going to get taken out first, that's a very valid trade from right up there. So anyways, let's see how it reacts. Okay, beautiful. So again, first target would be right here, right at Asian lows. You can see we got a sweep right there and goes right back up. Okay, so right now, this is super clear, right? So if you got in this trade right here, stop just above this high, I would put it 2 pips. First target would be Asian low. That's a 5R, right? Good trade. It didn't get to where you wanted it to, and instead, what it's doing is it's just getting above this, like I said before. And all this is really going to be an accumulation, right? So it's just going back to like what ICT teaches in his free content there, where he talks about the accumulation, manipulation, distribution. Okay, so that's exactly what we're anticipating, and we have time on our side here where London is typically going to be that move, right? We have our consolidation in Asia. London is that manipulation up to a POI, and then we get that distribution in London, and then we get a pullback, usually pre-New York, and then continuation in New York, right? So this would be the sell model for the day, and that's why I was really anticipating that this was going to be a bearish day. I thought that we were going to get this, and this is how the day was going to end. In London close, we were probably going to be here. It's going to consolidate, and then we were eventually going to start coming back up like that. So that was my idea for the day, but it's not exactly how it played out. So anyways, what we have here again, liquidity pooling. Let's see if it tags up into our zone. Is there anything else that we should know from here? Well, look at this right here. Okay, so we have a sweep on liquidity right here, right? Sweep, and then immediate consumption. This is really where the structure developed, right? If I just draw it out so you can see it clearly, right? Is that not exactly like what happened here, where we had sorry, it was right here. It was on the 5-minute, I think, wasn't it? Yeah, right here, right? Consolidation, up, break, right? It's the exact same thing as what's happening here. And so we're just playing that fractal up here. So this is where it is. There's a little bit, there's a bunch of imbalance right at the front of that candle. And so, yeah, like anywhere up in here, probably what I would do is I would actually just move this up to here personally. And then I would refine this down here because this was all mitigated to the highs. So if this doesn't hold, then I'm assuming that it's going to just keep going straight up to take out the 4-hour structure high. Because again, remember, we are in a bullish scenario right now. Okay, this is the low, this is the high, this is the low, and this is the 4-hour target that we're looking at. Okay, so let's see if it gets up there. Again, knowing that right here is that imbalance fill, because we could react off there, but again, we're still going to just be waiting for reactions anyways. And so right here is a perfect example. See, there was no reason to be looking for trades to get in here, right? Or to be looking, sure, but there was no reason to actually enter a trade here. Now, what happens? We tag our zone, we front run it with this little high here. And I'll just zoom this up. We front run it with this high. And then what do? We break structure. So this is a 5-minute break in structure right after tagging off our zone. Again, if you wanted to take this trade right here, just from this, with your stop above this high, you could have done that. 7 pips. It's just not a part of my strategy, first of all. And then at the same time, this is also in London. So I wasn't awake. I don't wake up until 6 a.m. So 6 a.m. is right here. Okay. And so by that point, we are already down here. And so what I woke up essentially to this 15-minute structure and saying, okay, well, now, again, we have this consolidation in Asia. We have this inefficient move, or not inefficient. There's actually super efficient, because you can see all the wicks. See, the wicks are mitigating wicks are mitigating the wicks. But what was inefficient was this. And the fact, look at this price action right here, right? Just a clear channel, 1, 2, 3 runs on liquidity, taking out a previous day London high into an order block. And plus we have the daily cycle in check. And then plus we have this imbalance here and all these equal lows. Like, of course, I'm looking for shorts now. Again, this goes about my daily cycle. So now I have to focus on a couple things here. First of all, where am I looking to enter the market? Now, if you look at the 1 hour, to me, I had this marked out right away. I actually just used this for my higher time frame POIs. So I just used the 1 hour order block. And then I was going to do the 1 hour midpoint, which is right here. And I was expecting some reaction off of just the open, because of course that's where majority of the time you get a reaction, right? But also it can dabble deeper in, just like right here. I think that it's going to use the 4-hour OB, and then I thought that it was going to come back deeper into the order block, potentially hit that 4-hour midpoint of the order block. Okay, so that's what I was looking at. Let's go to the 5-minute. Let's see if we can get any confluences right there. So again, yeah, first level, there was a clear order block here, and this is kind of where I wish I was thought a little bit differently here. Sorry, but essentially what I was thinking was that, let's just fast forward this until it hits our zone. Okay, so it hits our zone right here, right? Hits our key level that we were looking for price to get in. You can see that it is induced with this sweep here, or sorry, with this low here. Okay, and we're in this low, so this one should hold at least as a pullback, like we said, getting up above this high and potentially using this high to get up to the extreme point right here. Okay, so that was my idea for the day, where I was anticipating that, look, it's pre-New York right now, right? It's 5 a.m. So it's post 5 a.m. So between 5 a.m. to 7 a.m. is pre-New York. That's usually when you're going to get that consolidation back up. So what I was anticipating was that price was going to get up to here, mitigate off this level. And then if, depending on how structure looked right here, potentially we would get a pullback down and then go up one more time, use this as a weak high to induce this extreme point and then go down. That was my thinking for the day when I started to see price go up. And I'll show you what I mean by that. So you can see here, it goes back down one more time. And we sweep another low. And now we get right back into that 4-hour order block. Again, all within the last candle here that swept liquidity and then goes up. If we actually, let's see if we can refine it maybe a little bit more on the 1 minute. Really, the last candle was this one right here, right? And that lines up perfectly with the 4-hour OB. Okay. So again, these are going to be my levels that I'm going to be interested in. If the 5 minute is going to be this one right here, and again, there's an inducement right in front of it. So again, if there's an option to enter off that, then that would be a decent one. However, this is the most extreme, right? This is the one where I would say it's you observe price at, and this is the one where you can set limits at if obviously it develops the way that you want it to develop. But that's why this one was more of my like observational order block here that I was anticipating, right? Because again, it is the one that broke structure entirely. And so it shouldn't be ignored. And that was something that I kind of didn't value enough today. I was just immediately looking for the extreme, which is okay. Like if that's a part of your strategy, you just trade the extremes, then okay. But this one, it made sense to be very cautious of for shorts here and be aggressive a little bit more aggressive with shorts at that point. So anyways, you can see here, we are now in pre-New York. Again, like I said, this is when the pullback is likely to start. And something I noticed here was this right here. You can see dollar index made a higher high, right? A higher high. And at the same time, oh, I can't drag that out. At the same time, Euro US dollar started making a higher low, which means that there's divergence, right? There's a cracking correlation between the two pairs, or between the dollar and the Euro US dollar. At the same time, I also noticed that this low made a higher low and this low made a lower low. So that means that they're on the RSI, sorry. And so for me, that's a good indication that we're going to be reversing as well, because that's going to be our hidden divergence. So as soon as price breaks above this level right here, this last up candle, really, right? This last structural level, as soon as we break above that, it should indicate to us that this is going to come up to this level. Okay. And so that was my thought process essentially right there. Okay. You can see, so we didn't break above that yet, but we did break above that. There we go. Now it broke. And then you can see as soon as we break above, retest back into it. And now you start seeing the bigger candles come in. Where does it go? Targeting this high here. Okay. Again, where does it get up to? It's within this 1 hour order block now. We have the midpoint of our order block right there. And then that also has an OB. So there's some confluence right there as well at the midpoint. But it ended up just actually getting right up to here. Right. So that's the last imbalance fill here. And also with the 1 hour order block, you can see very clean leg, very clean, very inefficient. Sorry, it has periods of inefficiency, right? It's not an inefficient leg because you can see it's correcting up, correcting up, correcting up, but it's not really ever mitigating any of these levels, even down here, right? So when this happens, you have pockets of imbalance throughout it. And because of that, you can usually anticipate price to come back into it. So especially see how inefficient this was after the run on liquidity here. We come back up into the zone. I should have been way, way more aggressive with shorts here, but I was really adamant on just waiting. I actually had just a limit set up here instead, which is fine, right? Then I can observe here. But what ended up happening was we came right back up. If I actually go to the 15-minute, you can see it. No, sorry, 5-minute. Yeah, right here. You can see we had this sweep on liquidity, mitigation of these wicks right up here, right? Mitigation of these wicks. We have a breakdown, a retest of this order block that was made here, but there was no confirmation because there's no break in structure, right? This was the structural point right here on this leg. So what I would want to see first before looking for shorts is that to break down, which it does right here. Okay. And look at this again, very inefficient. You can see the gapping in price there, the very blocky candles, very little wicks, just block, block, block. That I'm assuming is going to get filled up again. That's what those are the candles I like to see. You can see it right here too, right? Gap, blocky candles immediately gets consumed. Okay. Blocky candles immediately gets consumed. Okay. So that happens all the time. And so this one is one of the reasons why I should have been a little bit more aggressive with the shorts here. And instead I was looking for longs right here. I was looking for longs right here, which is a good trade in my opinion. Because again, I know that these are going to be these are blocky candles, right? And I know that they're going to get filled. I also see that right in front of it, in close proximity, we have an inducement, right? Very close proximity. Additionally, this is a strong low. You might not, and might not look like it, but because it's confirmed with Dixie, the dollar index, look what happened on dollar index, right? This is what would happen on dollar index. Consolidation right here. And then dollar index went like this, right? If I inverted dollar index, is that not a strong low right there? A sweep and then a break of structure. So when you have divergence, even though price doesn't necessarily sweep, it still is a strong low, because all this means that this pair is going to be the stronger pair. And you can see that's why you actually got the significant run out of that. And it was super quick. I was actually looking for entries here, couldn't get any. And so basically I waited for right here. And so I set a limit right here. I actually posted it in the group, and I said, I'm just gonna put my stop just above here. And I'm gonna be targeting this level. Why? Because in my head, I was saying that this was now the 15-minute break in structure. If you see it right here, we had a 15-minute break in structure here, and then we had a sweep down here. So to me, sorry, this was the 15-minute break in structure here. Okay, this was the 15-minute break in structure here. We had a sweep, we had a break of that structure. So getting the first touch back into here, back into this mid or this breaker block right here, it's going to be right there, but refined is going to be right here. And then even more refined, obviously on the 1 minute, is going to be right there, right at that last imbalance. And so that's why I set my order right here. And I said, at least I can take price right back up to here. But ultimately, because this broke structure, what do we have here on the 15-minute? We have consolidation, we have a sweep, we have a break up, come back in. Then this one should have been my weak high, if that's the case. And then targeting up into a more extreme level, right? And this is just a consolidation before coming back down. So that was my thought process, but I was very aware that we were in a larger 1 hour zone. So let's just play it out. You can see, look at price consolidate right in front of that zone, right? Again, this was the higher time frame level that I have marked out right here. I'll just take that off. But you can see equal lows right in front of it. We have some more lows right there. Let's see what happens. Boom, right there. So this was beautiful trade, but it didn't fill me. It didn't fill me. It hit me right on. Didn't fill me because I didn't account for spread, which is, again, something I normally do, but I didn't think it was going to stop right there, to be honest, but it's all good. Again, your first target will be this structure right here, right? This is going to be that inducement up that's going to be filling up this imbalance, or it's going to be providing liquidity for this imbalance fill. And so that's what happened. As soon as it reacted, I saw that it printed this order block right here, and I was ready to take another trade right here. But what ended up happening was it just left this station. Just went right up there. Okay. So it just left the station. That was it. Now we get to this point, and I'm saying to myself that I'm pissed off that I missed this one, honestly, because I was like, oh, I thought that this one was going to be good. And we have, again, our 15-minute structure here. And now that we broke structure again, I figured that this was going to come into here and we were going to start getting up into this level. This is where my mistake came today. And actually, so I missed this trade here, and I actually took an L right here because I took this one instead. Okay. Because we broke 15-minute structure, and then we had a confirmed 5-minute break in structure right here. On the 1 minute, it looks perfect, right? Like it looks good. Honestly, we have some lows right here. I like this low on this wick because this is really the candle that broke structure right here. So there's definitely liquidity building up right there. And then it immediately gets run down, filling some of this imbalance up. Okay. So there, I was saying at this point, when it was coming down like this, I was like, something wasn't feeling right about it, honestly, because I just saw this sweep right here. And then this right here was an entry, the order block entry to go short. And again, this is what I was saying. I wish I was a little bit more aggressive with the shorts rather than being like, oh, like being set in my ways to say, oh yeah, I think it's going to be up here instead. Once it mitigated this 1 hour order block, like that's all it had to do for this 1 hour structure to be valid, right? It didn't have to go up any higher, which again, this one was okay. This one was okay in my opinion, because it was the first test of that 15-minute structure, that first 15-minute 15-minute extreme structure. This was the first part, and then we printed some equal highs, relatively equal highs right here. So to me, and then again, we had this super imbalanced balanced price action, and then we had a key level right there. So this one would have been a decent trade if I got tagged in it. I would be okay with that. This one, I'm okay with it, but at the same time, I know it can be improved, and it could be improved by looking on the 15-minute in the 15-minute. Look what happened here on the 15-minute. Like, this is not a good buy opportunity after it hits a 1 hour point of interest. We hit this 1 hour point of interest, mitigate it. What ends up happening? You see, look at this high right here. Okay. This high, we swept with one candle and then it immediately consumed. That's indicative of reversal, right? One candle, immediate resume. Okay. No problem. It could still go up from here, right? Like, obviously this could just be setting up to be liquidity, setting up this up right here, this high for liquidity for higher prices. But the fact that it bounced off of a 1 hour order block, there is no reason why I should be taking that second long after we mitigated off of it right here. See that? How we mitigated off of it? And then it starts to break down. This should be where I'm looking to confirm shorts, as opposed to being, okay, let's catch alongs here because it's still going to go up. I was just so dead set on this, on price getting to the extreme today, as opposed to adapting to what price was doing, specifically right here on the 15-minute. And I saw it too. I wasn't neglecting it or anything. I just saw it, but I was just like, nah, like, just dead set on it going up for some reason. And especially one of the reasons as well is because this didn't even get mitigated. It front runned it. So I figured, I'm like, okay, I think it's at least going to break above this 5-minute structure right here, right? We have a 5-minute break, up, down, mitigating the wick, and then it's going to come back up here. I thought at minimum it was going to get up here and then go down. So again, I'm not too upset with the trade today, because the logic was there as to why it would go up there. It's just, again, higher time frame trumps, and ultimately what happened here is we got this pullback up by pre-New York. As soon as New York hits, look what happens. Boom, 7 a.m. we get that rejection and go. So now this should be confirming that downside. And yeah, so I just should have been a little bit more focused on the downside as opposed to the upside until we at least swept all this stuff, right? Until we swept all these equal lows and all that, all this low. And then this was into this imbalance, right? Into the 1 hour imbalance. Once it dabbles into the 1 hour imbalance, then I can start looking for longs. So again, we didn't get up here. So the extreme point we still have to consider, right? Because again, this could easily go up like that, or it could go down and then go up again like that, just build up liquidity up here. Okay. So let's just see what happens, and I'll show you what happened, right? This was my entry, literally right on that last down candle. And then it zipped down and then it played a little bit. And I thought right here, I was like, okay, like we broke structure, like, okay, I think it's going to go up from here. This order block, it respected it. It started going up. I was like, oh yeah, starting to get confident. Next candle, just ripped down. So I was just like, oh shit. So it is what it is. It's like, I'm not worried about losing, you got to take the risk to access the opportunity. So it's not worried about that. I just should have been a little bit more focused on the sells. And if I were more focused on the sells, then this would have been the trade I was going to take, right? Because ultimately, this was it. We mitigated off of this level, a key level here. We came up, we broke structure. And so we mitigated off of a 1 hour point of interest. We broke structure here. We came back down. We induced it. We mitigated it. We actually induced it 2 times. Just front run that. And then we broke structure down to there. So this could have potentially been taken if I was really adamant on the sells. Where would I be targeting? The front of that imbalance right here, because it can turn right at the front of it if it wants, as long as it just dabbles into it. And so that's what I would have, maybe I should have been a little bit more aggressive with that instead, as opposed to looking for longs there. So again, it is what it is. Good lesson for today. But overall, the idea was right. The bearish idea was right. I was just trying to trade the pullback play first. So that's a higher risk play anyways, as opposed to following the higher time frame order flow. And the higher time frame order flow was definitely coming to the downside here. You can see we swept structure there, broke structure here. Therefore, as soon as we come back, we can come back up into here or into here, and those would be sell opportunities, right? And boom, that's what happened. It didn't even touch that. So to be honest, there wasn't really any opportunities to enter the sells, in my opinion. Maybe that one there, the one I pointed out, but that one would be a little bit of an aggressive one, especially because we didn't actually mitigate there. Maybe you could have just taken it right off of this, right off of the 1 hour order block plus this order block influence. But again, that's just not my strategy. We had a sweep there that was sponsoring this move, great, but yeah, it just wasn't enough. It wasn't enough for me to put it there because I know that if it went up into here and fed into this imbalance up here, I would have been like, oh fuck, like I should have seen that coming a mile away. So again, the extreme always wins, or it's what I like to focus on the extreme as opposed to just these ones. These ones in the middle, these observational levels, is exactly that, is to observe price. There wasn't really a break of structure at all. This was the only level that we had a consolidation, a sweep, and then back down. So I was actually looking, I actually had my sell, I had a limit again set right here when this happened, when this broke down. I had it set here because I wanted to see price come back up into here, use this as an inducement and tag the extreme. And again, I would be observing this level here. Didn't get up to there. Didn't get up to there. It just swept it. And again, what time? This is really important too. 9:30 stock market open. Look what happens at 9:30 stock market open. Right here, boom. Price goes up, sweeps an intermediary high, and then absolutely dies. So it is what it is. I was looking at taking that trade, couldn't get into that short as well. And that's what it is. And so then I was thinking that right here, again, we were going to dabble. We dabbled into here. I actually refined this because this was the 50 point, but I see it's kind of in the middle of nowhere. And then I see this beautiful level right there where it's a 15-minute point of interest. It's a 30-minute, and it's 50%, roughly 50% of this imbalance on the 1 hour. So I was really, really adamant on that getting hit as well. And then you can see 5-minute beautiful order block right there. So I was really adamant on this price level getting hit. What I failed to realize too, again, just looking back in hindsight, is that, again, this one failed here. So I just move this over like this, right? That's it. But again, the bias was correct for the day. I just want to add that, right? Everything was there. Perfect. It just didn't get to where I wanted it. And we didn't, even when it came right here, again, you could be entering on this if you'd like, but to me, because we were failing to make a lower low right here, right? We had a wick down and then we had it up. I figured that this was going to be that weak high, that we were going to take that out and then build some more liquidity in a 3-wave type of structure like that, and then come down. But now this is our daily cycle. For me, this is the daily cycle. 1, 2, 3, 4, boom, right? That's it. So now you're not looking for any more downside, or at least I wouldn't be. I'd be only looking for upside, at least until this high right here, right? The break of this high up into the 1 hour midpoint. So I'm going to take off this for now, right? The 1 hour midpoint, and then also this refined level, right? Because then this is potentially that. And then we can continue down one more, especially if we don't mitigate a significant level. So that was my thinking. I even posted in the group. I said, hey, look, like, I think that we're going to get back up to here. I believe I said that in the group. If not, I said it to another buddy of mine, but I also was looking at shorts from up here, and then they got blasted through. There was no opportunities there though. So it's all good. So anyways, what I realized, sorry, going back to that, is that this is a 15-minute breaker block, right? So we had this level right here. We had this consolidation that led to this sweep on structure right here. Immediately it was consumed. And then we had all this liquidity built up in front of it. And so something I missed here was that there was a breaker block right here, and that if price does dabble into here, potentially we can look for some longs back up again, up to here, right? We can get up into that point at least. Or if this is it on the 4 hour, right? If this was the move on the 4 hour, then that means that this is going to be our 4 hour week high, right? That's our 4 hour week high, because again, we're just mitigating structure here. Where is the next high going to go? If we're making higher highs and higher lows, well, it's going to make a higher high right here, 4-hour structure target. Okay. And so if that was it, then that means there's this option there. And then there's this option for deeper into the point of interest and then go like that. So those were my two options from this point on. But regardless, both of them are pointing upside. So looking for upside and looking for longs is a good idea here. However, that being said, nothing based off of my strategy. I got nothing based off of my strategy. Okay. So arguably you could have taken this right here. Okay. Where this was the last down candle that swept liquidity. Okay. So we break above it, we tag into it. And now you start seeing bullish order flow. So you could have probably taken any of these 1 minute mitigations here. This one didn't quite tag into it actually. Neither did that one. Okay. But then what do you notice? This is the structure that should have held if we were going to continue bearish. Get a sweep on liquidity there, sweep, and then a break of structure there. Realistically, that can be refined down to this one, right? Right here, right? So this one should have held. It doesn't, and so that this structure is broken right there. And then we have a sweep right there. And so if that's the case, this is the order block right here that broke that. So what I was anticipating right here, again, I don't trade in London close anymore because I've just found that it's just unprofitable for me. So essentially what I was anticipating was that price was going to get respected around here, or potentially, again, because we made equal highs here, it was going to blast somewhere up into the here and then come back down like this. That's what I was anticipating if we were going to go up one more time up into this level. Didn't quite happen like that. It didn't even break back down actually. So if I just fast forward here again, you can see we got it right here. I was like, okay, this is perfect. I said, perfect. This is coming back down into here. And then it's probably going to go up one more time up into this zone here, right? The most extreme point. But yeah, what happened is it just died out and it just went straight up, literally straight up. So I posted in the group. I said, okay, that was, I was wrong about that, about it reversing here. We didn't show any signs of reversal here though. It blew through. So you shouldn't even have been entering any shorts there, even if you were looking at that. So we can just get rid of all this right here for the day. All right. And I said, okay, well, 4 hours is going to be the target. And I set the blue dot right there. And I think I have it. Let me just try and open up Telegram again, just one more time. Right here. Yeah, you can see it right here. Basically just said higher time shows bullish trend is still intact. And I want to see it dig deeper into that 1 hour imbalance, but it didn't happen. So again, this was the 1 hour imbalance right down here, right in here. It really just hit the front of it into that breaker block. The breaker block was something I neglected to see. Not that I neglected to see, but I just didn't think it was going to hold because we already dabbled into it once. But again, it just got reclaimed over here, and then it started ripping. So that's where I said, if anything, right now it's going to get above that structure target, the 4 hour structure target, which it does right there. And what else? You can see we get right. We front run it. This is indicative of just being a liquidity and inducement, right? And look at that. So where are we right now? We just dabbled into that, got a decent reaction out of it. And again, where we're at now is that this on the daily, sorry, let me actually just go on the 4 hour. This on the 4 hour is, right? So we have a daily break in structure right here, and we had our 4 hour move up. And now we're at the most extreme point, right, of the daily structure, meaning that, am I going to buy here? No, absolutely not. This is the place where I'm only looking for sells, because sells could either go down into this point here or lower using this as inducement into this here, into the extreme, or what I would be anticipating until this breaks is that this is going to be the weak low, meaning that the rest is going to come back down to here like this. And so we have 1, 2, and we have a correction in that middle there. And then from there, then we'll see what's going on, because we still are in this consolidation. However, I do believe that that's the next move, or like what I want to be seeing. If we break above this, then no worries, because the next point that I'm going to be looking at is right here. I think that this is eventually just building up to get up to here anyways. So if it does it without taking out this daily level first, then so be it. Then we just get like this. And then I'm going to be looking for shorts from in around here or in and around here, because ultimately we have this consolidation here. We have a sweep on liquidity right there. We have a break of structure. We have a retest, and then we have this going down. So ultimately, it's this from this high. Hold on 1 sec. Sorry, let me just mark it out. From this high to this low, this is our trading range, right? This is the higher time frame, high time frame trading range. And so if we're looking for a retracement, right, back in consolidation, breakdown, this is our move. If we're looking for consolidation, we want to see it get up to 50% or higher, right? Because this is going to be our premium price range right here of this swing. Now, this is perfectly at 50%, so we have to keep that in consideration. It could hit here and then drop, or what's going to happen is it's going to get up to here, deeper into this point of interest, or even all the way up to the very top of it. You use this all as inducement like that, and then start going down again. So we'll see. We'll keep these in mind. But yeah, that was pretty much it for today, guys. I hope again, I hope you learned from my mistakes, and I hope you learned kind of why I went wrong there, because I think it's important, and I think it was easy to do, and it wasn't bad at all. Like, it wasn't that bad. It could have been avoided for sure, but I'm okay with that one. It wasn't. There was logic behind it, right? We had again, just to reiterate, we had in an extreme point of interest up there that wasn't mitigated yet. We had a 15-minute break of structure right here. We came back down into the most extreme point. So I'm going to be longing right there, because this should technically be the 15-minute week high. So that's what it should be. However, what I just failed to recognize was that once it got mitigated here and we broke back down, to me, that's clear that this was a sweep. And now this is going to come to attack these lows. So we should not be looking for longs with these lows to protect us, because if those are likely to be the target, then obviously we don't want to be longing there. Additionally, again, we were in that 1 hour order block, and we were respecting it pretty friggin' well right here. So right, we respect it. Boom, boom. This was when the entry was on this candle, I believe, if I remember correctly. And yeah, just is what it is. Came back down to the last down candle and then shot up. So there was no entry on this long either. There was only entry on this short, but again, you'd have to have a bigger stop for that. But could have potentially added it in on the side there. So anyways, hope you guys got something good out of that. Let's see what's going to happen for the rest of this week. If this is going to be the high of the week right here, that's placed on Tuesday, and then now we're going to get a run, right? It could happen, right? We have an open right here, weekly open, and so we could see this, and then the rest of the week down, and then we close like that. Okay, so we'll see. If not, this has to hold. This level has to hold, and if it doesn't, then we'll definitely be looking to get price up to here, up at 43, yeah, 4300s. All right, guys. Hope this added value again. I'll catch you guys in the next one. Cheers.